What's up, everyone? Welcome back to my channel, Wolves of Investing. My name is Donnie Nguyen, founder of Wolves of Investing. If you want to learn how to achieve financial freedom through investing, be sure to click on that subscribe button right now. Today, I'm going to be doing my monthly M1 Finance portfolio review, where I show you how I'm investing my first $1,000, first $10,000, and beyond, investing on a budget with just $20 to $40 a week. So let's get right into it. What's up, everyone? So here's my M1 Finance portfolio. The current value is $1,057.23. I'm pretty excited about that. The portfolio just reached $1,000 this past month. I'm investing in this account as if I were just starting out, just like when I was a struggling college student working part-time jobs to put myself through college. I really wanted to show you guys that it doesn't take a lot of capital to start investing in the stock market. Even with just $20 to $40 a week, starting about 9 months ago, I've been able to get my account to $1,000. If you want to learn how to invest in the stock market, I truly believe that you should start investing as early as possible, even if you're investing on a budget. The sooner you start investing, the sooner you can start learning from your successes and your mistakes. All right, so on to the returns. My all-time return is 41.33%, and my monthly return is 23.54%. All right, so let's go take a look at the activity. If you've been following me for a while, you know that my strategy is to invest $20 a week when the stock market is at all-time highs, and when the stock market goes into a bear market like it did a couple months ago, to invest $40 a week. And then I won't go back to $20 a week again until the stock market is within 5% of its all-time highs. Going forward, I'm going to be changing this strategy. Instead of investing $20 a week when the market's at all-time highs, I'm going to be investing $100 a month. Because this is a taxable account, someday, when I sell my stocks, I'm going to have to figure out the cost basis. And it's going to be easier to figure out the cost basis if I make one purchase per month versus making 4 purchases per month. The other change I'm making to the strategy is instead of doubling my investments during bear markets, I'm going to strategically invest more money when the market drops 20%, 30%, 40%, or 50% from its all-time highs. So at those levels, I'll be investing an additional $200 or $300 into my portfolio. That way, I'm still able to take advantage of lower stock prices during bear markets. So the last purchase I made was on May the 4th, $40, and I made these 7 purchases. Now let's head on back to the portfolio. So I still own 11 stocks in the portfolio. Beyond Meat has been doing really well for me. My average share price of Beyond Meat is $66.87, and the current share price is $133.51. Market cap is $7.6 billion. Let's take a look at Yahoo Finance and a few highlights from their last earnings report. That they had a quarterly revenue growth year over year of 141.4%. And I really think that is just outstanding. I mean, companies that are doing great are growing revenues at 30%. So to grow your revenues at 141% is just really amazing. You take a look at the balance sheet, they've got $246 million in cash. And their total debt is only $43.46 million. So they've got a super solid balance sheet. And the thing I really like about Beyond Meat is I really love their product. I think that their product quality is just head and shoulders above their competitors. And I see Beyond Meat as the Coca-Cola of plant-based meats. My plan for investing in Beyond Meat is to keep investing in them as long as their market cap is under $10 billion and as long as they keep crushing it on their sales. Even if they go beyond $10 billion market cap, that doesn't necessarily mean I'm going to stop investing in Beyond Meat. It just means that I'm going to take a step back and then reassess my plan. The next stock on my list is The Trade Desk. They're an advertising company, and I was listening to the earnings conference call the other day, and their CEO is really excited about connected TV, all of the opportunities that come with advertising on connected TV. Their company had a really solid quarter. Next stock on the list is Paycom. They sell human capital management software to various companies around the United States, covering all kinds of industries. They're a software as a service company, and it was really interesting to hear their CEO talk about the state of the economy, because their company actually has insight into the decreased payrolls from all of their customers. The United States unemployment statistics came out today, and it came out at 14.7% unemployment. It was really interesting to hear their CEO talk about the unemployment rate based on the statistics that they were seeing from their own software. And their stats actually showed that the unemployment rate was around 14 to 15%, which was very accurate and in line with the stats from the BLS. So I just wanted to talk about a couple more companies on my list, Amazon and Floor & Decor Holdings. Amazon had another outstanding quarter. They've become the delivery company of choice for many people during the pandemic. And the big news with them is that they plan to invest $4 billion to ensure the health and safety of their employees. That includes things like PPE, such as 100 million masks and 34 million gloves. So it's actions like these that makes me proud to be a shareholder. The last company I wanted to talk about was Floor & Decor Holdings. Last month, I was a little concerned about Floor & Decor Holdings because they sell flooring for homes and businesses. My thinking was that because we may be entering a recession, that their business would be really negatively impacted. But after listening to the CEO talk on the conference call and taking a look at the quarterly financial statement, I feel pretty confident that they're going to be able to weather this storm just fine. And they actually see this as an opportunity for them to take more market share once the economy turns back up again. Before I sign off, I just wanted to mention a couple more stocks of interest: Republic Services and MasterCard. I actually ended up picking up some more shares of these stocks in my other portfolios in my Roth IRA and my 457 account. Both of these stocks got beaten down. Republic Services, they're a trash and recycling company, and their business barely got impacted by the pandemic. Taking a look at their quarterly results, it's as if business continued as usual. So I thought that the recent dip was an awesome opportunity to pick up more shares. And MasterCard, a recession, a slowdown in spending certainly will impact their business, but the way I see it, they survived the Great Recession, 2008 to 2009, and they have a mission to displace cash with digital transactions. I think that their business and their market share is going to keep increasing over the next 5 to 10 years, and I thought that this recent dip was a great opportunity to pick up more shares. So that's all for today. I hope you all enjoyed this video. If you did, please consider subscribing to the channel if you haven't already, and click the like button. And drop me a line in the comments. What are you guys investing in these days? Thank you so much for watching, and I'll see you next time.